Well, good Monday morning. I think I'll start out the week by wrapping up our Quick Tip series, showing you how to pull that all together. So it's on my mind because this week I have a rather large forensic bookkeeping project in front of me. And to be quite frank, this specifically is what I'm trying to help you to avoid, right? Like when you get to the stage of doing your bookkeeping forensically, you're almost always in some kind of trouble, and that trouble can be, tax troubles can really run away from you when you're a proprietorship business and you don't have source deduction income tax. And so we're trying to show you how to keep your records clean, make sure that you're able to defend your legitimate claim as a small business person or a farmer or even a T22 holder in this country. So let's do a quick recap, shall we? We started out talking about vehicle receipts, whether they were because of a T2200 claim or because you're using it as a part of your business to make money on a T2125 claim, or it is the farm truck that is really the workhorse of how you run your farm. It doesn't really matter. Vehicle claims are legitimate. I want to make that clear too, because there's two things that people need to understand. One, your vehicle claims are legitimate. Nobody's trying to tell you they're not. And two, vehicle claims are easily the single most reassessed topic in the CRA world because people don't necessarily do the best job they could of this. So what did we do? For our vehicle receipts, we just made one simple little change to our lifestyle. We decided that when we were putting fuel in the farm truck or in the work vehicle or the carpenter's van, whatever it is that we're using for work, all we're going to pay for on that receipt is that fuel. That's it. If we want chocolate bars and sandwiches from beside the till, we're going to get out a different card. We're going to get out cash from our wallet. We're going to pay for those items separately. All that's going to be on our fuel receipts is fuel. So that was the first step that we took. And the same thing with repair receipts, right? Like if there's repairs to that vehicle, all that's on that receipt is those repairs to the vehicle. So we're not being drawn in by what I call the cash register bait. Not saying there's anything wrong with cash register bait, but we're not going to allow ourselves to be drawn in to take those extra purchases that they're trying to get us to take. And if we are drawn into taking that, we're going to do it separately. We're certainly going to do it on a separate receipt, and we preferably are going to do it from a separate bank account or credit card, right? We're going to try to keep our business bank account completely clean. That was one of our points. So then the second point that we came to, where did we go from there? We went from, so if we are Belinda's bathroom company, a very successful proprietor building custom bathrooms for people, and we have huge amounts of materials that we buy on behalf of our clients to complete our jobs. Those materials, just as an aside, are known in the business as cost of goods sold claims. So we're going to keep our cost of goods, the materials we buy for our project, same thing. As we're coming through the cash register at the building supply, we are not going to be drawn in by cash register bait. We are going to complete the order with just the materials for the job. If we also need to pick up a bottle of propane for the barbecue at home and a bag of salt for the water softener at home, that needs to be done on a separate receipt. right? Honestly, these are really, really simple things. You just got to remember to do it. You got to remember to reach for that other card, and you got to ask the person at the till to start a new tape. It's just that simple. So that was the second thing. So now we got clean receipts for our vehicle. We got clean receipts for our cost of goods. The next thing that we talked about when we're bookkeeping our receipts into our books, we're going to put some detail around them, right? Because the next big thing, and those of you that have a huge travel component already know this, that one of the things that ends up being a part of your reassessment is proving that your travel and your business were the same thing, right? And, honestly, I think we all realize that people have perhaps once or twice in the far distance past tried to slip a family vacation in with their work travel time. Well, the CRA's on to that kind of stuff, so they're going to be looking for those types of things. So one of the things we've done to help make our case simple is we include the location name of our businesses when we're bookkeeping them. So what I mean by that is if we're working in, say, Spirit River, and we stay in a motel in Spirit River, and so we put that Spirit River Motel in there, and we buy fuel perhaps at a fast gas in Spirit River, and so we put that in as fast gas Spirit River. Now, in our books, we already have fast gas stations from a variety of other places. We're not concerned about that. There's no real advantage to us to grouping all of our fast gases together. But there's a huge advantage to us in bookkeeping our receipts in this kind of a more detailed fashion. So we're going to do the same thing with any restaurants or diners that we eat at. So now, just imagine with me, if you will, the very first thing that your assessment agent likely wants to see is your journal or your actual books. So that might be a spreadsheet, that might be an actual blue column ledger, that might be a profit and loss statement generated out of something like QuickBooks or Sage or Simply Accounting or something along those lines. Whatever that is most likely what they're going to want to see first. So if you imagine with me looking at a general ledger that's been book kept in the way that I'm talking about. Now, I can look and I can see, Buddy was in Yellowknife, and I can see he stayed at this particular hotel for 9 days while he was in Yellowknife. He was buying materials from this particular hardware store in Yellowknife. He was eating at these particular outlets in Yellowknife. I've got a pretty good picture without even talking now to the taxpayer as a reassessment officer. I've got a pretty good picture that the taxpayer was in fact in Yellowknife. And because of the hardware store receipts and everything else, I'm pretty sure that he was probably up there for legitimate work purposes. So what might be my next step, right? And by this, I'm trying to reinforce the idea. Remember, your assessment officer is just a person with a job, like you and me, right? Just a person with a job like you and me. So how do you figure out what they're going to look for? Well, think about what you would look for. What would I want to know now? Now, I'm pretty sure because of the way you've done your bookkeeping, I'm pretty sure you do have a legitimate traveling, thing as part of your business. But, I still need to do my due diligence. My boss is going to want to know that I looked a little bit past that. So maybe I'm going to look through these. Yeah, well, probably nobody's taken their family to Tuktoyaktuk, or nobody's taken their family, to a very, but maybe I see in there a pretty desirable location in the Shuswap. Okay, well, let's call for a few receipts from there. And that's what gets me to here. So this will be the second part of your reassessment. So a couple of things. If you're called for receipts, there needs to be receipts. So don't Don't ever make the mistake of putting false receipts in. Also understand, all the stuff we've talked about permanent receipts. So you can't write in on a faded out thermal slip a bunch of numbers and expect that your CRA assessment agent to accept that. So that receipt needs to have been preserved at the time that you got it. And if it's already past that, it's just suspicious to handwrite things in with a pen, right? Yeah, like you can see that if you're the assessment agent. So what might you look for? To just do a second check to make sure that this was a legitimate trip, because the shoe swap's a pretty nice area. So maybe I'm going to ask to see a variety of your meal receipts for that time period, that 14 days that you were in the shoe swap, and maybe I'm going to want to see your hotel bills for that period of time. What am I looking for? I'm looking for meals for one, and I'm looking for hotels for one, right? Just want to assure myself so that when my boss asks me, did you check? I just want to be able to say, yeah, no, I looked into these things, and these are not disguised family vacations. These are legitimate business costs. So, like I said, you want to be able to produce these receipts, right? So to do that, I recommend you've got them all nicely neat now. You've kept your receipts clean. You've done all the things we've talked about. Don't throw them back into a box, right? So these file folders are cheap at Staples. You get a dozen of them like this and label them January through December. This is, by the way, one way of doing it. I'm going to talk about the other way in a second. This is the way that I feel is the best, most powerful way of looking after your stuff if you want to be involved in your own business defense. So you got a dozen of these by the month. What are we going to put in here? We're only going to put expense receipts in here. Okay? So now, when that CRA assessment officer says, yeah, I want to take a look at that shoe swap trip in August, I want to look at some of those receipts because, August and the shoe swap seems like the kind of thing that, maybe might have been a family vacation. Well, now I can just reach in here and I can pull that out. I can produce those receipts to that investigation immediately, all of which is now starting to make things look good. On the other hand, if I don't have a receipt, if the very first receipt I'm asked for I don't have, I'm going to start a series of questions now. Or if the very first receipt I produce, is not clean and not well book kept like we've talked about in previous videos. So we cleaned everything up for one reason, and now we're going to record it in a way that we can put our hands on it if we need to. And trust me, you will need to, right? Again, nobody's picking on you. CRA has due diligence that they have to do. So then I really recommend that in addition to month by month for expenses, create another file for revenue, okay? Now, for many people, this will be one. For a farm operation, you might actually do revenue as 12 months as well. And a variety of other, if you're looking at selling goods and you're going to be looking at literally hundreds of sales receipts in a year, you might want to break this up into a dozen files too. But for many, many businesses, this is where your invoices are going to go. Okay? I really recommend, because there's a lot of money in your pocket into getting this part right, keep your GST correspondences and record keeping in a separate file. Now this third file, third different color that I put in here, this one may show up in your file when you get your files back from your bookkeeper/accountant. And it'll say personal on the top of it. And these will be files that we've gone through your bookkeeping and we're saying, yeah, that's probably not going to fly. And we've pulled them back out for you. All of that then needs to be kept somewhere. So for most up to pretty good size proprietorships, this is a solution that we have found works very nicely. If these are also not expensive. They're not expensive devices, and you can put everything into here neatly, and when you do it up, it holds itself together. And now if that's just tossed in the closet somewhere, when you need it, it'll have the date on it. It'll have everything that you've very carefully done. You don't ever have to think about this again unless you are called to produce something in here. That's the beauty of this system. So that works really good. Another system that works pretty good for a lot of people is, and this is good if you have like a library space or if you have an office and you want to keep your files more accessible, but you don't necessarily want to buy expensive filing cabinets. You can get something like this, one per year. This will also handle, as you can see, quite a lot larger volume. So that's another solution. And this is another solution that we use with clients, right? These are beautiful little boxes. And again, it's the same thing. So this would be a very busy business, and you would have one of these per year. Each one of these we're thinking of in terms of one per year, and you choose your solution entirely based on the size of your file keeping challenge. So that, I think, is going to wrap up the MCR Accounting Quick Tip series for the time being. I'm being told by the accountant that I have another project to move on to regarding some T2 cleanup stuff that we want to talk to people about. So it sounds like the next MCR Accounting Financial Literacy video will, in fact, be aimed more at our T2 clients than, we've been doing more or less all T1 taxpayer stuff up until this point. So have a nice day. Thanks for stopping by. As you can see, my work's cut out for me.